Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. AI optimism. Stocks in Asia and the US futures, surge on strong results from Micron and a pledge by China's Politburo for more fiscal stimulus. Cliffhanger. The latest decision from the Swiss National Bank is due this morning, with investors split on the expected size of the cut. Plus, the US, Europe and Arab powers push for a 3-week ceasefire between Israel and Hezbollah as they look to prevent a wider conflict.
Anna, let's talk about equities. Risk on seems to be the narrative. Take a look at what we're seeing in European futures. We're up by over 1%. NASDAQ futures are up by over 1%. You've talked about Micron. You've talked about the story coming out of China. The China story, the CSI is up by over 3%. We are rallying into the close in China as we get messages from the Chinese authorities that the economy is now a priority. However, I would caveat all of this. Take a look what is happening in crude today. Crude is down by 2%. The Saudis apparently abandoning their $100 pledge, plus also extra supply potentially coming in from Libya. So oil looks like an outlier today. Equities definitely on the front foot. The countdown to the opening trade starts right now. Thursday, the 26th, good morning. The word of the day could be Politburo. It could be Brent, but actually in reality, it is Micron. Micron is the driver of global equities this morning. You are seeing the evidence of it in Asia. You are certainly already seeing evidence of it in US futures. The AI trade, Anna, is back.
Yeah, the AI trade is back, and this time it comes with another acronym, HBM, High Bandwidth Memory Product. This is what Micron has been producing for the market and isn't able to produce enough of, and that's what enables it to have pricing power. So that's the Micron story. It is really positive, an emerging type of computer memory that's doing really well. They sit alongside processors from NVIDIA and Intel. The stock went up by 14%. On the back of these numbers. But I am slightly more drawn to that fiscal pledge from the Politburo as well. It's the confluence of these things, isn't it? It's the fact that we got that AI excitement, and then on top of that, the news out of China on the missing piece of the jigsaw.
Absolutely. So it looks like we are going to see Chinese equities finishing at 2-year highs. That has certainly been a positive picture over the last few sessions. There was fears maybe that actually the sugar rush wouldn't last that long. It does look as if the Chinese authorities are taking this stimulus story much more positively than we originally anticipated. We thought it might just be a PBOC thing. Looks like it's going to be a broader thing than that. So we'll look for that. But if the AI story has been one that has been fading into the background a little bit. I say that a little bit.
Yeah. It's all relative.
Yeah, precisely. We've talked about this broadening in the market recently, that we are going to see other areas of the market more broadly in the global equity story starting to gain a little bit of traction. AI is now back. Does that concentration story start to resume as we see Micron, which is the biggest producer of chips, really starting to drive that story as well? It's not just the NVIDIA story, it is others as well.
Absolutely, it is others as well. And it was interesting, talking of broadening out, that yes, they're talking about providing these chips for the sort of high-end AI space, but there were also some more positive lines around what the consumer is doing. And as we put more AI technology into consumer items, what that does to demand for places like Micron. Let's move away from what is quite a risk-on session and all the drivers of that to some of the things that we're watching today. And one of those is a rate decision.
50 or 25. We talked about it when it came to the Riksbank. Are we going to see a surprise coming out of the SNB as well? It is Jordan's last meeting. He has characterised his term in office as one that is capable of delivering surprises. He almost has relished in the idea that he has delivered surprises to the market. We've seen a multiple of them. Are we going to see another one today in his final meeting?
Absolutely. Anyone remember 2015? That was when they removed the cap on the currency, wasn't it? And that was certainly a surprise. And that reminds us of the long tenure that he has had, some 14 years at the helm of the central bank. In terms of whether it's 25 or 50, I mean, we should the sort of market sense is a little more divided. But if you look at what economists are expecting, only 3 don't expect, 3 out of 32 don't expect to see a 25.
But economists have got a terrible record recently.
I'm not sure anyone has a hugely positive record until we're told what to expect.
OK, fair enough. Look at the Fed meeting. Economists, I caveat it with the fact that things changed very quickly right at the last minute, but none of the economists expected 50 basis points to be coming from the Fed.
And very few of the economists saw the very first rate cut coming from the SNB. And I remember we talked to one of the very few people who was calling it at the time. Anyway, so we are setting up for what is called a three-way cliffhanger, because it could go in all kinds of directions. But it does seem as if there is some expectation of 25, but it could be 50 because of the stronger Swiss franc, because of the weakening of inflation that we've seen in Switzerland, and because of the scale of the Fed move, of course.
The consumer is front and centre in all of this. I just want to flag Helen and Marit's results are dropping onto our screens right now. We'll come back to the corporate story in just a moment, but they are weak. They are very weak. We'll come back and talk about that in just a moment. Let's talk about what is happening with the geopolitical story. A couple of factors we need to fold into the narrative, I think, this morning. One of which is what is happening in the Middle East. The other one, what is happening on the east coast of the United States. You've got this key meeting coming up a little bit later on today. I think just approaching 2 o'clock between Volodymyr Zelensky and President Biden. I'm looking forward to see exactly how that meeting progresses. But this talk of a ceasefire, a 21-day ceasefire in the Middle East, does seem to be gaining a little bit of traction. Yes,
and when US officials are saying that they expect statements of acceptance from Israel and from Lebanon around this proposed ceasefire, and that's what they expect to see within hours, it sounded, from reading the reports of our colleagues. That does lend some expectation to the story, but then we haven't heard officially from Hezbollah on what they think, and obviously that's going to be crucial. President Biden even going so far as to link this, if we can make progress on this, to, can that open up progress on Gaza. We'll see where this ends up. But we've seen days of airstrikes, of course. And just yesterday, we were seeing plenty of talk on the Israeli side about the possibility of a ground invasion. So we'll see whether all of that event at the UN General Assembly manages to turn the tone around. And Ukraine, very much in focus, as you point out today, with that supposed victory plan, coming through from Zelensky.
It's interesting to see. It'd be interesting to see how European and global defence stocks move around all of this. We take it back to the market and try and figure out exactly what the relationship could be. If you do see a peace plan in Europe, how does that change the narrative for some of these big defence contractors? We haven't talked a lot about oil. I just want to briefly throw the oil story in there as well. I'm not sure it's related in any way to the geopolitics that we're watching this morning, but we are seeing oil under significant pressure today. It looks like the Saudis may be abandoning their $100 target. It looks like the Libyans may have found a way forward on the central bank, which could allow potentially more capacity to come back onto the market as well. All of that dragging down the price of crude.
Yeah, despite the fact we got those lines out of China, which says a lot, I think, doesn't it?
We're going to talk about all of this. What does the macro picture tell us? What does the data tell us about where we are with the global economy? We've got the perfect person to ask that question to. The former ECB President Jean-Claude Trichet is going to be joining us. His thoughts on central banks, the new French government, what the data are telling us globally. Has the Fed made a mistake? Is inflation really under control? We'll talk about all of that with Jean-Claude Trichet. Helen Jewell from BlackRock is going to be joining us. We'll get her take on the market. She thinks the AI trade is broadening out. We'll take it back to Micron with her. We've got the SNB decision. We're going to have analysis on that with Christine Kuhnby-Nielsen of Danske Bank. We're going to take there. Plus, we're going to discuss the latest out of Ukraine. Arisia Lutsevich of Chatham House is going to be joining us to talk about the victory plan that we understand will be presented in the Oval Office by Volodymyr Zelensky to President Biden a little bit later on. But let's come back in the meantime to what is happening with these H&M numbers. Yeah,
the corporate story then. Real disappointment, as you suggested. Operating profit coming in way below expectations, 3.5 billion Swedish krona against 4.6. And I just mentioned the numbers because there's a big difference between them. So it's so important to know the scale of the miss there. They are talking about markdowns, and this is interesting in the context of consumer strength or weakness. They're saying the cost of markdowns in the fourth quarter is expected to increase somewhat. So that's the forward-looking statement. They are talking about sales expected to increase by 11% in local FX in the month of September. So sales not looking too bad for September, perhaps, but it's the cost of those markdowns that seems to be bringing the headaches. They will do a buyback, though.
It's interesting that you are seeing this is the point at which Inditex is investing. So Zara is investing aggressively at the moment in terms of its back office and its data and its ability to manage its inventory. It's investing in logistics, investing in flagships as well. So it's interesting to see the differing messages that we're seeing coming out of Helen and Marit's and out of Inditex, which obviously owns Zara. Let's talk about what we've got coming up for the rest of the day. 1:30 p.m. London time. You get data out of the United States, which you're going to want to pay attention to. You get the jobless data, the claims data, plus you get the durable goods numbers. Collins, Kugler, Bowman, Powell, Williams, Barr, Cook, Kashkari. I think you've got enough Fed speakers to digest today, to think about, to give us a message on what is happening here. Will that message be consistent? Lagarde, De Guindos, Schnabel, all talking as well. Plus, of course, Jean-Claude Trichet on this programme. We've got this Israel story that we want to be keeping a very careful eye on. The Israelis and the Palestinians addressing UNGA a little bit later on. What else do you need to know this morning as well? New York City Mayor Eric Adams has been indicted following a federal corruption investigation. The indictment is sealed and is not yet clear what charges Adams will face. The FBI investigations into his office first became public last November. Adams says he is innocent and intends to fight the allegations. Bloomberg has learned that the French catering firm Sodexo is exploring an acquisition of its US rival, Aramark, as it seeks growth overseas. Aramark shares have gained over 30% this year, valuing the company at just under $10 billion. And OpenAI is said to be discussing giving CEO Sam Altman a 7% equity stake in the company. This as it restructures to become potentially a for-profit business. It's a major shift that would mark the first time Altman has been granted ownership in the AI startup.
Coming up on the programme, will it be a jumbo cut then from the Swiss National Bank? We'll bring you the latest decision as it happens. That's in around an hour and 20 minutes' time. Plus, ING says its AI model is better at pricing currencies than humans. We will speak to their global head of quant trading. Up next, France's government pledges tough action ahead of their 2025 budget presentation. How will investors respond? We are going to be speaking to Jean-Claude Trichet on that very subject. If you have any questions for our guests, if you'd like to get in touch with the team that puts together the programme, we do like to hear from you. IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
45 minutes away from the opening trade here in Europe this morning. Futures are very positive, as we've already indicated. The story coming out of China looks strong this morning, which should, in theory, at some point be good for Europe. Plus, we've also got the Micron story to factor into our thinking as well. Europe has less of an AI trade, but we are seeing something of a halo effect coming through this morning. Let's talk about what is happening with the macro picture. Traders have ramped up bets on an October cut from the European Central Bank. This after a slew of weak data out of Europe over the last few days. We are joined to discuss that data now by the former ECB President, Jean-Claude Trichet. Good morning.
Good morning.
Very nice to see you. The data, certainly at the beginning of this week, the PMI data, painted a pretty gloomy picture of what is happening in Europe. One of the comments attached to the data that we got, the Eurozone is heading towards stagnation. The Olympic effect that had temporarily boosted France, the Eurozone heavyweight economy, is now beginning to fade. What is your assessment of what the data are telling us?
First of all, it's absolutely clear that there is some kind of stagnation, and as regards manufacturing, we are going down. The US also a little bit. I mean, there is something to understand better between service and manufacturing. On the other hand, I don't think that it changes the perspective of having slow growth from now on up to end of next year. So I don't think that it pre-announces some kind of, recession that we feared a lot a few months ago. So it seems to me that it confirms very slow growth in Europe and disappointing manufacturing, very disappointing manufacturing, to be clear enough. Now we will see again. PMI is one spot, sure. And if you would apply the PMI, which is extremely boring in the US, to the monetary policy, you would say, why are you decreasing rates in the US? Because it goes fantastically. But of course, you have not only to look at the PMI of 1 month, but to look at the perspective.
I want to come back to the US story in just a moment, but let's talk about the manufacturing side, which you say kind of is very weak right now. China looks finally like it is going to start to stimulate its economy in a significant way. That's the headline that's dominating the agenda this morning. If China does deliver stimulus in size and manages to get its economy moving again up towards the 5%, how quickly does that start to lift some of that manufacturing gloom that we're seeing here?
I think it will have a very positive effect, obviously, and the market is probably right to anticipate this positive effect. Europe, as you know, is much more depending on external trade than the US, if I compare again Europe and the US. So I think it's particularly good for Europe in the, I would say, very difficult perspective that we have today in Europe.
So that's how China reads through into the European growth story. Jean-Claude, can I ask you about Germany? I want to get your thoughts, obviously, on France, and we'll do that. But in terms of the other big powerhouse of Europe, the German economy, is it rethinking its economic model quickly enough?
Well, again, I have a tendency to trust that the Germans are able to, I would say, cope with all the difficulties they might have. They had a lot in the past already. But obviously, they are hit by three considerations that are very, very, I would say, profound and demanding. First, they had subcontracted their energy to Russia. Doesn't work. They have subcontracted their trade to China. I hope it will go better, but of course it's also a problem. And of course security is totally subcontracted to the US, which is also, I hope not, but also a potential problem. So they have a lot to do, obviously, as all other. And I don't think it would be good to pinpoint Germany as, I heard that already, that they had enormous problems, they were the sick man of Europe, and so forth. I don't trust that. I trust that they are able to cope with their present difficulty, which are undeniable.
Yes, you list a number of issues they're facing. Banking consolidation has come up recently as an example of something that can be done in Europe to improve things. That won't answer all of the problems in Germany, but is it a necessary but not sufficient task ahead, banking, cross-border consolidation?
Yeah, well, that is the anomaly of Germany. When I was myself in the ECB, I was absolutely amazed to see that this economy was very powerful, as you said, with an industry which was remarkable, an exporter which was remarkable, and nevertheless, because of the very heavy banks that are totally public, they were not keen on having a very good and vibrant private banking sector. And we are still there. So I hope very much that they have a wake-up call now and that they will embark into modernization of the structure of their banking sector. Because the main problem is very simple to explain. They have a lot of banks that are not too keen on making profit.
Do you think there is a danger that the United States sees inflation re-accelerating after we see a 50 basis point cut? Is there a danger that we find ourselves in a situation where we may actually have to see hikes in the not-too-distant future in order to contain an economy which still looks very, very buoyant?
Yeah, first of all, the economy is very buoyant, and of course, it doesn't come from a laxist monetary policy, in my opinion, mainly, but from an extraordinarily expansive fiscal policy, which characterizes the US in comparison with the other advanced economies. Now, that being said, I think we should not I would say, neglect the remarkable success of headline inflation. And we came for a position which could have been as bad as after the first oil shock and the second oil shock, and had the central bank and the Fed in particular practicing benign neglect. Then we would have had at a time Paul Volcker to come back and put the short-term rates at 20% in order to regain control. We had very responsible central banks in general and Fed in particular. 11 augmentations of rates successive really had, I would say, mastering inflation very well, in my opinion. That being said, I am struck by the fact that core inflation, on both sides of the Atlantic, is very resistant. And we still have core inflation around 3%, or a little bit more than 3% in the US. And it stagnates at that level. Namely, the goal, which is to produce 2% in the medium run, is a little bit more complicated than was thought. So we will see. Obviously, I trust the Central Bank of the US to try to do things as well as possible in order not to miss the goal, because the market trusts the goal. the credibility of the central banks and the Fed in particular, but also the ECB, is at a very high level, in my opinion. And it is mainly because they had said, we confirm that our target, our definition of price stability is 2% in the medium run.
Let's talk a little bit about France. Hold that thought for just a moment. Jean-Claude Trichet is going to stay with us. I want to take you to Paris, though. My colleague, Caroline Conan, standing by to talk about what we are anticipating out of the new French government and exactly what the tax story is going to look like, how the deficit is going to be managed. Caroline, I read the French papers this morning. Tax hikes are across the front pages.
That's right, and even though the electorate is not necessarily going to like that, savings are needed. The budget minister already warned yesterday that the deficit this year could slip to more than 6% of GDP, when the initial forecast at the beginning of the year was 5.1%. So the current Banque de France government has actually said that as much as 100 billion euros of savings will be needed over the next 5 years, probably at least 20 billion a year, and that's without taking into account the increase of spending by local authorities of as much as 16 billion euros that we've already seen this year. So there will be tough measures ahead. Michel Barnier, the new Prime Minister, has already warned that he's going to focus on targeted tax increases for wealthiest individuals, for multinationals. Some areas being explored, for example, would be to increase the 30% flat tax on capital, which was one of the key measures of Emmanuel Macron. Another area also would be a super profit tax on some multinationals, an exceptional tax, and perhaps even a tax on share buyback. So these are the few areas being explored. We'll know a little bit more with the general policy speech on Tuesday, but this government is very fragile and has got this huge task of presenting a budget by October 9.
Caroline, thank you very much. Bloomberg's Caroline Conan, Jean-Claude Trichet, former ECB president, still with us. Jean-Claude, do you think bond investors should be nervous about this budget? What do you see in the plans being discussed that make you nervous?
Well, first of all, what makes me nervous, of course, is that we have a level of public spendings as a proportion of GDP which is higher than the other member of the euro area. And I have to say, probably the highest amongst the advanced economies. So that's a very important point. And we have also, at the moment I'm speaking, I would say, overall taxation, which is also extremely high, not surprisingly because the spendings are extremely high. So what I would expect the French government to confirm their goal, namely to go back progressively to a more normal situation, and of course not to have this kind of extraordinary level of spendings and deficit. Normally, the right way to do that is to try first to diminish the spendings, which are, I would say, it's overdue, and second, to see whether there are absolute necessity to augment taxation. Of course, in terms of communication, taxation is immediately the thing you are speaking of. I expect the government to be very, very serious on diminishing public spendings because it's absolutely necessary. And if you concentrate only on taxes, you will only weaken the economy, even if it is absolutely necessary in any case to reach the goal. And the goal is to convince all the observers, market participants, investors, savers, that they can trust that indeed France is going in the right direction in terms of deficits. And I insist again, public spendings.
Jean-Claude, it's been great to see you this morning. Thank you
was a pleasure.
For dropping by to see us and sharing your thoughts with us on so many subjects. Jean-Claude Trichet, the former ECB president, thank you very much indeed. Coming up, we're going to be speaking to the incoming president of the Swiss National Bank. We're going to get reaction, of course, to this morning's SNB rate decision. Looking forward to all of these conversations coming up. This is Bloomberg. 30 minutes to the opening trade here in Europe. Futures are looking positive. We have a strong set of factors to basically put into these markets this morning. I'm trying to think of the right words to describe it. You've got a very strong story coming out of China. The Politburo meeting seems to have suggested that the Chinese are ready to deliver on their promise to stimulate the economy. You've got the Micron story, which we need to fold in, which is lifting US futures. S&P futures are up by 0.7%. NASDAQ futures are up even more. European equity futures at the moment up by 1.2%. The CAC up by 0.8%. In terms of the bond story, quick look at what is happening there, just to give you an idea. You are actually seeing a bid into the market this morning, which in some ways is surprising. You have seen equity markets and bond markets recently moving in different directions. That doesn't feel like it's maybe the story this morning, Anna.
Yes, and certainly we've got those lines from China to work in. We've got the news out of Micron, but that's not the only tech story we're dealing with this morning. Now to our scoop on OpenAI. Bloomberg has learned that the company behind ChatGPT is weighing giving CEO Sam Altman a 7% equity stake in the business. Let's bring in our tech reporter, Robert Lee, from Bloomberg Intelligence, of course, so you can give us perspective on this. How big a shift is this? Is this a big deal for this business, Robert?
Well, it's part of the ongoing saga at OpenAI, I guess. I mean, we've seen, obviously, Sam Altman was deposed as CEO and then reinstated. We've seen a number of high-profile departures from the company. And at the same time, they're trying to get away a substantial fundraising at the moment, which, based on news colleagues' earlier reports, could be valued at close to $150 billion US. So the issue with OpenAI at the moment, as I think most people know, this company was set up as a non-profit for the benefit of the greater good back in 2015. But since then, they've brought in commercial investors such as Microsoft, who obviously are there to utilize the technology and turn a profit. So what's happened is the structure of the group overall has evolved, and a new for-profit business has been, if you imagine the umbrella structure of the group, has been established below the non-profit. So the news that broke by our news colleagues, or I should say the story that broke by our news colleagues, is that maybe Sam Altman could take a 7% equity stake in that for-profit business. So again, this is not confirmed at the moment, but this, if it is ultimately confirmed, there's another step in the ongoing evolution of the structure at OpenAI. So the saga will continue, I guess.
Robert, what's the read across from Micron into the rest of the sector?
Okay, context is everything. Micron is the US's largest memory chip maker with a strong position in the DRAM market and also NAND flash. If you look at its share price, this stock had roughly halved in value since its peak in July, August. So again, that's one thing of context I think people should focus on. The second is if you look at the earnings estimates for this company, they've been brought down roughly 8%. So what is new is that the reported numbers, again, bearing in mind these are estimates that had previously been downgraded, came in ahead. But more importantly, their guidance was ahead. That's because they're playing catch-up to Hynix in something called high bandwidth memory, which is used in these AI-enabled servers. So the AI-enabled part of the business is doing better than expected. There's a read across onto AI. That's not entirely unexpected. But do bear in mind that the bulk of their business, the chips that they manufacture, go into mainstream smartphones and PCs, and there is weakness on that side. These are low-growth markets with a high degree of economic sensitivity, and obviously going into a slowing economic environment or potentially recessionary environment, there is ongoing scope for weakness in those parts. So I think the conclusion of that is, the bulk of their business will likely come under increasing pressure. Are we going to see follow-through on this move? Given that the stock's already halved roughly year to date, I think that is open to debate. I'll leave it as that.
Robert, thank you very much. So room for weakness, you think, but certainly didn't hold the stock back yesterday, as you suggest. Robert Lee from Bloomberg Intelligence, thank you very much. So from one of the businesses that is benefiting from the AI boom to a use for artificial intelligence. The Dutch lender ING is starting to use artificial intelligence to price currencies. It says the model outperforms human traders. Let's get some perspective on this really interesting story. We're joined now by Kimia Minukade, who's global head of quant trading at ING. Kimia, nice to see you. So help us understand how technology, it's already had a big effect on the way that trading in FX happens. So even before AI, 75% of spot market trading, I understand, in currencies was done by algorithms, and now we have a new revolution, I suppose, with AI tools. So how much better are the AI tools than the humans who are already juggling a lot of algos?
Yeah, so I think you made a really good point, because FX has for a long time already been very electronic. You gave the numbers, and I think right now with AI, it is just an extra step that we're taking to really stay ahead of the curve and to provide competitive pricing to our clients. And the reason for that, I think specifically in FX, in recent years, the landscape is really evolving very quickly. The market, in terms of the traditional algorithmic models that we have been deploying up until now, it's been good enough where you have visible market data, you can fit good models to move forward and for them to be relevant for some time. But with the landscape evolving so quickly, we're in a world where we can't necessarily predict, showing a certain price, how the market, how our clients will react to it. So in order to stay relevant, I think we have to stay ahead of the curve and use tools like AI.
Okay, so this is about staying ahead of the curve. I don't want to go instantly to the negatives, but I find myself just testing the approach a little bit. I mean, what happens if things go wrong? Who's to blame? The person who created the AI, the person who's sort of operating it at the time, if anybody is? And how do you prove best execution? How do you make sure that customers are still getting what they need here?
Yeah, so there's always trading oversight, and it is still the trading desk that is responsible for the algos. And we are ultimately building them as well. So, and everything has trader oversight. We watch all our algorithms, including the AI model. And one of the reasons, actually, we've been able to build this quite quickly is because we've got all the safeguarding in place. We have a great, robust, strict algo governance procedure in place, which is why we were able to roll it out so quickly. So we work very closely within that framework.
Why did you start with FX?
Well, with FX, other than it being our expertise within the financial markets, FX is really ahead of the pack across other asset classes in terms of electronification, sophistication of models. Because we know equities markets has been electronic in terms of execution algos. They were the first to employ it. But I think since then, again, because of the sophistication of the FX landscape, FX has really sort of been ahead of the other asset classes.
So FX is ahead.
Yeah.
What comes next? What is this best suited to next?
Yeah, so I think in terms of deploying this across not necessarily just the AI algo, but speaking to the other asset classes, some like equities say they are already electronic. There, for example, it could be just improving the sophistication of the models. But in the rates and credit space, for example, credit is really an area where there's big momentum in terms of electronification, in terms of taking the experience and expertise from FX.
So you say that this AI is better than how a human does it, and it freed up a person. So does this, not talking about specific people, but do the people freed up by this go on to do other things with their life, or do they do other things within banking? I mean, what are we freeing up people to do here?
Yeah, so it depends. For us, again, this is sort of freeing up resources within our own team. So if anything, we're sort of, automating what we were doing. So ultimately, it gives us time to build more models like that, or to focus on other asset classes, essentially.
And how much data do you need for the AI to you clearly think you've got enough data, because you say it does really well.
Yeah.
I mean, I'm thinking about really rare events, and you have to go back in history a long way to find those. Does the AI need to be able to pattern match with those to be effective? I mean, how much data do you need to do this?
I would say, again, because the landscape has changed so much, in a way, if we go back, even 5 years or years, might not be relevant information either. So it's sort of a balance to strike as well. And the whole reason we're talking about AI or sort of self-learning algorithms are that it can adapt quickly. So we use that information, and in big market moves, for example, there's lots of other indicators that already give us that instantaneous knowledge. So I think in that case, it can handle it fine.
Is AI going to dampen volatility?
It's a good question. I'm not sure about that.
Because there are some voices that say they're worried it will create more volatility.
Well, this is the thing. But in theory, if it's better at matching prices, if it's better, in theory, it might reduce. I'm just kind of wondering what the ripple effect.
I mean, I think especially in the FX world, I mean, it is really the macro events driving volatility ultimately.
Right, okay.
So if anything, I think this is about staying more stable, providing more competitive pricing to clients. So if anything, within that sort of macro-driven volatility conditions, the AI can still be quite robust and remain competitive within those environments.
Am I going to need a PhD in computer science? to work in a trading
So in terms of what the future looks like, there will be PhDs in computer science building these models. But in terms of what what a trader could do, they could either be building the models themselves, where they would need AI expertise, or there would be traders working with the models. So I think in any case, people have to be data literate. They have to be happy to work with the models, understand the models, even to a higher level. But no, of course, not every trader has to.
Yeah, but it must be getting very competitive for talent, for the right talent, for the people with those AI programming skills that you need.
Yeah, absolutely. Again, because there's, like you said, we said before, there's oversight over these algorithms. So as long as there's some understanding, knowing how to work with them, what they're doing, so there's an understanding around that, that's really important. And then a different skill set is building the model. So you really have the whole range, I think, of skill sets still necessary.
Do you think, just briefly, do you think you're ahead of the game?
I think we are.
Okay. Kimia, nice to see you. Thank you very much indeed. Kimia Mukade, Global Head of Quant Trading at ING. Thank you very much indeed. Coming up, we're going to go back to the corporate news. H&M says it won't hit its 24 targets as earnings miss. This after a colder than normal summer weighed on sales. Have you seen the weather outside this morning? I suggest some sort of coat. Maybe the next thing you want to buy. We'll talk about that and all the other stocks you need to be watching this morning. This is Bloomberg.
Welcome back. This is the opening trade. We have 15 minutes until we get that opening trade here in Europe. The futures picture points higher. There's tech news in the mix, specifically from Micron. There's news out of China. A lot to talk about then this morning with our Markets Live executive editor, Mark Cudmore, who joins us for 3 minutes on the markets. Mark, let me start with what we've had out of China, because I know that that's been really significant through the Asia session. And you described it as the missing piece of the jigsaw puzzle when it comes to China, the fact that we got the word fiscal used by the Politburo today.
Yeah, so earlier this week, I thought we had a major turning point in Chinese markets, an extremely bullish moment, the most comprehensive cocktail of stimulus we've seen right across sectors, and specifically targeting the equities market, but also adding parts around housing and consumer and M&A, all sorts of sectors. But there's a lot of cynics out there, and many of them said, where's the fiscal side? Where's the fiscal side? Well, Politburo said they will provide the fiscal stimulus that's necessary. They also said they'll kind of enforce the kind of lending with the lower rates that are out there. They've talked about employment and worried about the jobs market for particularly college grads. Basically, we're getting the missing piece added into that stimulus. It was already extremely comprehensive, but now there's really nothing missing. Okay, there's always going to be cynics out there. Even though the market's up about 10% in a week, there'll always be some people fighting from the losing side, and they're going to go, we don't have details of the stimulus yet. I think they're missing the point. In a state-directed economy, when every single arm of the economy, every single arm of policymakers from the highest level are giving a message loud and clear and coordinated, that is extremely powerful. They must win. They will make it win because they have said this is their objective. And I think that is the main message to take away right now.
Let's talk about risk-reward. How big is the potential reward here? How much upside could markets have? How much money can flow out of this big bond market rally that we've seen back into equities? What is the risk on the other side of that? How do those two sides balance out at the moment or not balance out?
So the risks are, well, we've just done 10% or more. I mean, like, more like 15% of taking Hang Seng Tech in the space of a week. It seems like pretty extraordinary short term. So short term, yeah, we could pull back for a few days, especially we got the holidays coming up. But I think that ultimately here, the upside is massive in terms of these are under-owned markets. For the world's second largest economy, investors all around the world are underexposed to it. They are discounted. Now, China mainland stocks overall aren't particularly cheap, but Hong Kong stocks are still very cheap by their own historicals or by any other metric. So the Hong Kong version are very cheap. And in China, it depends on the sector. So there's some cheapness there. So it's a cheap discounted market, which the world is under-owned with massive stimulus tailwinds coming now. The reward's massive, risk is short term.
OK, so that's your view on China. Let's get your thoughts on tech and AI and Micron in particular. How much did that excite you, that news?
I think it's really important. As you know, that I've kind of talked about for most of this year, I was going to say the last few months, that we're in an extremely bullish macro environment, particularly the last few months. We've got okay growth, we've got monetary policy support, fiscal support, we've got cheap energy prices, we've got good earnings, everything's positive. What worries me is the micro side, because I don't study those enough. Obviously, when you think of micro, you think of the AI euphoria. Micron is saying that the micro side also won't disappear anytime soon. Bull market continues.
Mark, great stuff. Thank you very much indeed. Executive Editor for Markets Live. Mark Cudmore, MLIV Go is the function on your terminal if you want to catch up with the rest of the team. OK, Joe Easton is here to provide a weather report. He's going to talk about H&M. Over to you.
I am Guy. I'm turning into a weatherman today because H&M is saying that the bad weather in Europe during the early months of the summer has hit their earnings, but their numbers today looking really, really weak. So the revenue actually coming in around 2% below expectations in the third quarter. And if you look at the profit numbers, the operating income and the EPS, missing by around a quarter on analyst estimates, suggesting this wasn't just about the weather, potentially a bit of weakness in the consumer. They have had an abrupt change in CEO just earlier this year. But if we look at the stock, really priced to perfection at the moment, the entire retail sector has actually recently hit a record high. This is a bit of a shock for the sector. Most of the earnings reports have been holding up pretty strong recently, so potentially we might need to watch some of the peers, maybe even Zara and also AB Foods, the owner of Primark as well. That sector really could be in focus. We're already seeing some weak declines in the H&M price on Tradegate as well, some losses on that market. Then in terms of M&A, we've got an unusual thing. We've got a European company going to the US and targeting a US firm. Sodexo, the big French catering company, is said to be looking at Aramark. This is according to a Bloomberg exclusive. Now, one thing that strikes me is that the target company is priced much higher than Sodexo. So the target company, Aramark, trades at around a 19 times price earnings ratio versus Sodexo's of around 13. So potentially this might be seen as an expensive deal. So I have actually seen some indications that Sodexo could fall on this. It would also face considerable antitrust security in the US because both of those companies have a big business in America, so there would be a review of that. So keep those points in focus. But Sodexo is one to watch over in Paris. Then a stock that is set to get slammed today is Ubisoft. It's bad news for the gamers, I'm afraid. It's Assassin's Creed, the old favourite, has been delayed. It was supposed to come out in November, but now it won't be until February. This is also because the latest Star Wars game has had bad reviews, bad sales as well. And we saw the Ubisoft ADR that we had on the screen there down 14% when this news broke yesterday. Now, bear in mind, since the pandemic peak, when we had nothing better to do than play the PlayStation, that stock traded at around 90 euros. It's already down close to 10. The market cap has dropped by almost 10 billion euros. So it's already had a big plunge, but it's set to get weaker today. Ubisoft set to be a decliner over in Paris this morning.
Joe, thank you. Thanks very much. Our equities reporter, Joe Easton. And we appreciate his updates on gaming. I imagine the Venn diagram of people who watch this programme and partake of a bit of gaming is, you know, there's probably quite a bit of overlap, I'm guessing.
Well, there is in my house, so sort of in a derivative fashion, yes.
There we are.
But not Assassin's Creed.
So, no, absolutely not. So news on Ubisoft that you can no doubt use. Let's talk about oil, shall we, Guy? Because you flagged this as something that we maybe haven't dwelled on enough this morning. Down by 2.3% now on Brent. This is just in one session. That's a big move. It was down by more than 3% around half an hour ago. It's pulled back from those lows. But there's news out of Libya that looks better politically. And there's news out of Saudi Arabia, according to other media, talking about where their targets really are on oil. And all of that is adding up to weakness. Does
Saudi walk away from the $100 a barrel price target? That is the key question. If it does, what does that do to OPEC? How does OPEC respond to that? Could we potentially see extra supply coming through? The market is pricing both of those two factors in this morning. What I think is interesting is that this is on a day when China is stimulating the economy that you pointed out earlier on. You wonder how far down oil would be if we hadn't seen those China headlines coming through. It's going to be interesting to see how the FTSE 100 opens this morning. So in theory, names like BP and Shell should be soft this morning, but do names like Glencore and BHP do better on the other side as we see maybe that purer China story being priced into the miners.
Yes, interesting, because I mean, we do have the iron ore price up by 2.5% in Singapore, and I'm just looking for where the copper price got to. Earlier on in session, it's not standing out as a strong performer, the copper price this morning. Oh, it's flat.
Had a very good run, though.
It has had a very good run, but it feels as if, the fiscal news out of China, which, to Mark Cudmore's point, does seem to be that missing part of the jigsaw and has moved risk appetite around stocks. That doesn't necessarily seem to be lifting prices of commodities. It was interesting, under the hood, they were talking about, yes, big fiscal pledges, but limits on new housing, and that's how they are stabilising the housing market. And so if that's where the detail lies, that isn't necessarily bullish for commodities.
Does this mean that we should be thinking maybe more about the luxury names? If this is a consumer push, is that something that we should factor into the European trade this morning? Is this an LVMH, an Hermès story that we should be thinking about? How does this work its way into the European story? We've often talked about the strong correlation between these two. Where does it show up this morning in terms of the pricing picture?
Yeah, we've got a host of stock specifics to focus on. We were just hearing about some of them from Joe, H&M, Ubisoft, for example, and Sodexo, but also BASF, because this picks up on the kind of Germany reshaping its approach more broadly. And here you've got a business that's got a whole load of what they're calling now standalone businesses that they're considering, what's the future of those? Returning a lot of cash to shareholders is their
Capital
plan.
Markets Day. We'll maybe go to Berlin for an update on that story out of Ludwigshafen a little bit later on. Coming up, the market open. Futures are pointing positive. Micron needs to be priced in. The Politburo story out of China needs to be priced in. The Chinese equity markets have had a very solid run today. The European Open is next, though. This is Bloomberg. Thursday, the 26th, a couple of minutes to go, 26th, a couple of minutes to go until the opening trade here in Europe this morning. I hate to admit it, but I think this chart is rather old hat in terms of what it tells us about how we're going to be seeing the market open this morning here in Europe. The white line's the European session yesterday, as you can see, finishing fairly flat. The US session largely actually saw stocks declining from the get-go of trade. But the problem with that is that since then we've had Micron out with numbers and its stock has absolutely soared and rekindled the AI story. Plus we've had the fiscal front being opened up by the Chinese authorities, and that has really boosted Chinese equities aggressively overnight. Both of those two factors need to be folded into the European future story this morning. So let me show you what we are looking at in terms of the story. We've got 1.33% on the stocks 50 to the upside. FTSE futures are a little bit of a laggard this morning. Oil is maybe potentially part of that story. It is down today. Are we going to see big names like Shell and BP under pressure? But look at Nasdaq futures up by 1.3%, Anna. That's the Micron story writ large. That is where you're going to see that being priced in a little bit later on.
Yeah, absolutely. So we'll certainly see if we get any kind of, squint, and you'll see it read across from the Micron story into the European equity session. In terms of individual stocks, we've certainly got these under review. There's a bit of a shopping theme going on this morning. H&M, we're not shopping as much, or we weren't in June. It was bad weather. I can't remember June. It wasn't bad. It was pretty bad this morning, though, when I came into work, I can say. But they've missed their targets. We'll watch that one. Sodexo, they might be going shopping in the United States for Aramark, the rival over in the US in the catering business. That's according to our reporting. And BASF could have some businesses for sale. They're returning 12 billion euros to shareholders between 2025 and 2028. Some standalone businesses under review, it seems, Guy.
Absolutely. OK, let's factor those single stock stories into the wider market open. Here we go. It is time for the opening trade. We are expecting a positive picture to emerge fairly quickly. We've seen a very strong story coming out of China overnight. We've got Micron to fold into the story as well. That lifting the technology theme. Oil, though, maybe acting as a little bit of a brake when it comes to particularly the FTSE 100, though French stocks, names like Total, could be under pressure as a result as well. FTSE 100 up by 0.2%. Stock 600 up by 0.4%. Are we going to see some of the mining stocks, though, doing a little bit better? Or is this a consumer boost story coming out of China that is going to lift names like lift names like LVMH and Hermès a little bit more? You can see the outperformance of the CAC Caron. So the CAC is up by 1.3%. The FTSE 100 is only up by 0.7%. The IBEX is up by 0.9%. We'll see how the DAX opens this morning. Some single stock stories that we need to be watching out for there. But Anna, what are we seeing below the surface?
Right. Well, to answer some of those those questions that you rightly ask. We are seeing a consumer boost, so consumer products and services is the best performing sector this morning, and we do see strength on those luxury names. So absolutely, we are seeing people joining the dots between what China is doing on the fiscal side and what we see in the markets this morning. So LVMH, Kering, Christian Dior, Richemont, Hermes, Swatch, Moncler, the list goes on. They're all up by more than 3% this morning. So that is real strong performance coming through from those luxury names. There is some room for another narrative in here as well, though, and that is the broader theme on China. And we also see the mining stocks going higher. So despite the fact that we didn't see a huge amount of upside to copper and some of the base metals during the Asia session, despite the news from the Politburo, we do have room for stocks to rise. So Anglo-American, Glencore, Antofagasta, they're all up by more than 2.5% this morning. So it does seem as if that China story has gripped us. Plus, you don't even have to squint to see the effects of Micron on the technology space. So technology is the third best performing sector this morning then, guys. So technology stocks really doing quite well this morning, up by 2.4%.
This is working out very nicely, or maybe not nicely if you're one of the oil names. Shell is down by over 3% on this weaker oil price that we are seeing. Total is down by 2.27% this morning. You are seeing Equinor softer, Eni is softer, Aker is softer, Subsea is softer. So the oil sector is where we're seeing the weakness, understandably, given the weakness we are seeing in the oil price overnight, which we mentioned a little bit earlier on. That number could have been far worse if we hadn't seen this China stimulus story maybe being factored in. Yeah, a really interesting way to think about it, actually, isn't it? That, you know, yes, we've got a drop of 2.4% despite the China news, but, you know, you assume that that includes the China news, and therefore, as you say, the drop could have been a whole lot worse. Just looking for some of the individual names that we were talking about ahead of the market open, we've got an opening price on BASF, for example. That one's down by 1.4%, so they've got this new strategy. They're returning cash to shareholders, thinking about asset sales, it would seem, but that's not quite enough to lift the stock in the very short term. Looking for some of the other names that we talked about, Ubisoft is one of them. That's still not open, so we'll wait for a price on that one. I also don't have a price on H&M. Well, I do have a price on H&M. It is down by 7, nearly 8% this morning. So significant weakness being priced into Hennes already. Let's see if I can just give you a quick price on Inditex as well, just to see if there is some sort of a read across into the retail sector. We'll bring you that in just a moment. That's up a little, up 7 cents. A little. Yeah. So that's interesting. Because Inditex seems like, Zara seems like it's investing heavily at the moment, and the recent set of numbers were much more positive than the numbers we're seeing out of H&M. So this is a definite compare and contrast story within the retail space. Let's get back to the China narrative. What are we watching this morning? Is the word of today Politburo, or is the word of today Micron? Certainly the China effect in Europe this morning feels like it is affecting a number of different sectors. You're certainly seeing the luxury names on the front foot. Let's talk about how you want to play this. Do you want to invest directly into China? Is it time to buy the Hang Seng? Is it time to get more direct involvement? Or do you buy this story via the derivative? Do you buy it via maybe LVMH? Helen, Jewell, EMEA CIO for Fundamental Equities at BlackRock, sitting around the table with us this morning. What do you think of the China story? Yeah, morning to you both. It's a really interesting one, and I'm going to answer your question with a very political both. You can do both of those things. I think what's really important about China, obviously for European stocks, very, very important, and we're seeing that today, but I wouldn't be surprised if tomorrow we see a little bit of a pullback, because that's what's happening in the markets right now. You end up risk on one day, risk off the next day, and you're seeing a lot of uncertainty in the markets. They absorb information like this and they go up a lot, and then the next day it feels like they pull back. Having said that, in terms of China directly, yes, I think there is a place for that in a global portfolio. And this is something we've seen in the last month or so. We have seen a bit of a rally in China, and today is a real reminder that with China, there is always a floor level to those stocks and those names. There will always be some stimulus coming through. And I think people forget that. The valuations got incredibly low. And so what we did see is a little bit more of adding to the portfolio. Not a huge amount. This is not an area that I'm saying, Guy, lean into massively. But let's not remember the floor level that you do get. So you think Chinese stocks have bottomed? You think that the stimulus is now commensurate with the idea that a floor has been put into these stocks? Yes, I do. Yes, I do. But the Chinese economy is still pretty fragile. I think that's the other thing I would take out of this. Let's have a look at the economy versus the stocks. The stocks are on a valuation were very, very low.
the economy is still looking quite fragile. And that's why, again, you know, normally I come here and I'm very positive on the story around a lot of, for example, the luxury goods names. We still need to be a little bit cautious of exactly how much influence the China stimulus and the China upside really can have in terms of supporting the economy. The valuations are where you do get the support at the moment in terms of the stock level. They have come up a little bit, so whether they might pop down a bit before they go up. But I think they have kind of, they're bubbling around where I see the bottom might actually be. So disaggregate what you see in the stock market from the economy. And again, I don't want to sound too negative, but I think there are so many of these drivers we've got at the moment, whether it's the US election, whether it's the AI story, whether it's the macro uncertainty, where you see the market in one day being so up and bubbly and positive, and then the next just risk off. It's quite a confusing market to be in.
We're all very fickle, it seems, right now.
Let me
pause your thoughts for one moment, Helen. I just want to get to some news lines coming through from Commerzbank, and then maybe we'll have a word about the banking sector and you know, what M&A can do there, perhaps, because it does seem as if Commerzbank, under Bettina Orlopp, staging something of a fight back against the takeover. They are talking at Commerzbank about seeing net profit rising to over $3 billion in 2027. Faster, stronger improvements to profitability is the language being used this morning. They're expecting to earn their cost of capital faster than expected, expecting to get return on tangible equity to increase to over 12%. So they're setting out a whole load of
She has to do this.
goals.
Orlopp has to do this. Am I the better custodian of this asset, or is Andrea Orcel the better custodian of this asset? He has proved himself to be a master of what is happening at UniCredit. He has turned those numbers around. Can I do better than that at Commerzbank? That's the pitch that she's got to make. And we're starting to hear from some of the German big investors saying, you have to talk to him. You have to figure out a way through this. You can't simply put your fingers in your ears at this stage. And she has to come out with a really strong case at this point to why Commerzbank should stay independent.
Yes, absolutely. So, yes, who do you want to run this business? And she's saying what she can do with it. We'll hear from Andrea Orcel, but probably more about what he would plan to do with it should he get hold of it. And you're right that one of the shareholders yesterday was saying, look, we need to see engagement with Orcel on what he could do. We need to see at least conversation. I suppose if we step back from this, the reason that this is so interesting to the markets more broadly then, Helen, is around M&A and what M&A within the banking sector can deliver, especially at a time when rates are coming down, and that's not going to be so positive for the banking sector in Europe because they benefited when rates were on the rise. So what's your thinking around the banking sector?
Well, let's take a step back to what's enabling them to do this. And something that we've talked about a lot in the banking sector is the returns on the capital that they've been able to generate. Now, up until now, a lot of that has been returns through buybacks. Critty has been talking about that a lot on this show, but buybacks and dividends. And now what we're really seeing is the third level of what companies do when they have capital, and that is look at other ways to deploy it through M&A. So I think it's actually, in some ways, surprising it's maybe taken quite as long for us to see what we're starting to see coming through in the banking sector right now. But it's a very normal thing that you see for a sector that has generated quite substantial returns, particularly when they're on that next leg and the interest rates are starting to come down. So what they're having to think to themselves now is, OK, to maintain these level of returns, how do we keep our margins in the robust level that they're at? Loan deposit levels are looking still very healthy. And I think that's something we have to remember from the banking sector. It's not just about the interest rate. It's about the structure of the banks. It's about the governance, how well run they are, as you've just talked about. So I think M&A is actually the kind of sensible next leg that you would expect, given the returns on the cash that these companies have generated and have on hand.
We talked to Bettina Orlopp at Commerzbank many times, and one of the things we always ask her about is the state of the Mittelstand, because she has a good understanding. She was CFO, of course. Now she's taking on the CEO role. Good understanding of how that really important driver of the German economy is doing. And what is your more general view on Germany at this point? Because, yes, we've got the news around Commerzbank this week. We've already also heard from BASF this morning, a fine example of the issues that the German economy has been dealing with. Certainly, the cost of energy, given what happened between Russia and the invasion of Russia by Russia of Ukraine, and how that has thrown the German model into disarray. So what's your thinking around Germany at the moment?
There's no doubt that Germany is having a little bit of a tough time. PMIs, obviously, last week were also a little bit disappointing. The oil price, obviously, coming down. It's a very, very industrial-led sector, so that should be helpful for Germany. It is one of the areas that we look at a lot, and I think it's also one of the areas that, unfortunately, is stopping global investors leaning into Europe from an investing perspective as much as I think they should. If you look at valuations in Europe, still pretty low, 13x, 13.5x versus the 2021 in the US. And I think things like the Germany story stop global investors leaning in as much. I think it's a mistake, because a lot of these German companies are so globally defined in terms of what they do. They're exposed to a lot of the great mega themes that we're seeing in terms of the transition and in terms of AI as well, which we're talking to this morning. I think they're missing that within it. But I understand the nervousness. It almost feels like another tick in that box of why are we concerned, why are we fragile about the way we're seeing the market at the moment, why are we fickle? It's a word I like. I'm going to use that word myself.
Yeah.
Europe runs a massive current account surplus. We send all our excess capital to the United States. Like, how does that change? I can't see a narrative that changes that at the moment. Do you think the US election could change that narrative? What is it that turns that narrative around? Because closing that discount, which I think is absolutely epic at the moment, Europe versus the United States, is something that's got to be a challenge for European investors, European policymakers. But I don't see a catalyst to do that.
No, it's the biggest worry that we have at the moment. And every time I think there is a catalyst, it doesn't seem to actually come to fruition. Or there is a catalyst, we have a little bit of a false start, as we did earlier on this summer or earlier on this year, and then Macron called the election and that pulled it back. We have a little bit, and then we have the German PMIs come through. The only thing that I think could be a catalyst is the ECB, when they cut the rates, it being very seen as a positive rate cut. I think there's a nervousness, again, of fickleness in the market, where there is a concern that the ECB is doing so because of recessionary concerns. Now, if that really comes through loud and clear, it's not because of that. That could be the catalyst, particularly in the small cap, which is on a double discount.
That's what we're getting with the Fed at the moment. The Fed's cutting because it can. The ECB may have to cut because it must. If it has to cut because it must, I think that will be really... That's almost what's priced in, I'd like to think. Earnings forecasts are going to start coming down for Europe. They're still pretty bullish next year, 10% plus. I think that's a little bit on the top side. If they come down alongside the ECB indicating they're cutting recessionary fears, that's not going to cut that gap anytime soon. If, on the other hand, we do have the ECB being much more positive, cutting in the way that I think the Fed is being able to cut, maybe that will be the catalyst, and maybe that's when we'll start to see that 13 become 14. But as you can see, I am a little bit hesitant guy right now at the moment. On the flip side, the markets have done very well year to date. It's been a really odd way. We're in this kind of situation. I've seen it being called a risk-off bull market, where you're on these highs with a real nervousness around it. So let's not lose sight of the bigger picture. The great companies, long-term, a lot of those semis down 25% in Europe, some real opportunities actively, but the market as a whole, I'm going to be honest, Guy, I'm a little bit cautious this morning. She's a little bit cautious. There's a few maybes in there. I heard maybe a few times in those sentences as well. Fickle, but that's the word of the morning, maybe. Helen Jewell, EMEA, CIO for Fundamental Equities at BlackRock. Thank you very much indeed. Call 6 looks like this morning. We do have oil stocks under pressure. We do have luxury names very much on the front foot. LVMH is up by 4.5% this morning. The China trade writ large across the European story this morning. You can see it really across the Call 6. Let's talk about some areas where we may be seeing a bit of weakness. H&M stands out. Joe Easton, back over to you.
So H&M is standing out, as you say, Guy. We have got some big movers today. Very exciting. Firstly, H&M down around 6% at the moment. Bear in mind, it's a €25 billion company listed over in Stockholm. That is the biggest fall in around 4 months for the firm. Now, they're blaming the weather, but really, analysts saying that there's probably more going on under the hood, given the size of the miss on their latest report in terms of the quarterly sales and profits. So we're not actually seeing a read across in the other stocks, suggesting that this is really H&M specific. So as I say, that one down 6%. The Primark owner holding up. AB Food up 1%. Zara and Next also as well doing pretty steady trading at the moment. But one stock going even further lower is Ubisoft. Now, we did warn about this earlier in the show. They've delayed the Assassin's Creed game by around 3 months, disappointing all the gamers. The Star Wars game also not as strong as expected in terms of the bookings. So they've cut their bookings guidance for the year ahead, and that one really underperforming over in the French market, around a 5-year low for that stock. Then in terms of a short seller report, this is breaking news. Yesterday, Gotham Research, that we all know from targeting Grifols over in Spain, they said they were going to announce a new short target, and they've just revealed it on Twitter. It's Mutares. Now, this is an investing and turnaround company over in Germany. They buy other companies, try and turn them around, change the management, that kind of thing. But Gotham is short. We have reached out to Mutares. We're waiting for a response on that one, but the stock absolutely slammed as Gotham reveals that report on Twitter today. Then another stock falling. This is Sodexo. It's the M&A news. We said how it's not that common for European companies to go over to the US and buy deals. And also bear in mind that Aramark, the target company we said earlier, the price-earnings ratio much higher than Sodexo's. It's an expensive deal, and therefore Sodexo is declining 7%. That's the catering company listed over in France, already a big US business, potentially going to expand over there. Then we'll check in on the China read across and also a bit of Micron playing into this one as well. Firstly, in terms of the miners, on news of more Chinese stimulus, we're seeing Anglo, Glencore, all of these stocks coming up. Also a boost for luxury. Take a look at Kering, the owner of Gucci, up 5% today. And chips getting a boost mostly from that Micron report. But Nordic Semi today announcing its own downgrade to guidance, giving some pretty weak numbers in their statements. That one is bucking the trend of chip makers moving higher. Nordic Semi down 17%, another big mover this morning. Then finally, we're going to look at a couple of broker moves. Firstly, Kepler Chevreau says that people upgrading their iPhones, their computers, splashing out on electric goods will benefit electric retailers. So they recommend buying Economy, up almost 10%. I didn't expect it to gain as much as that. Potentially a bit of the broader China news coming in. And finally, everyone still loves Rolex watches, according to Deutsche Bank. So they recommend buying watches of Switzerland. They say you shouldn't consider this as a proxy for broader luxury because it's all about Rolexes and they are indestructible in terms of demand. So that one is rising 5% as Deutsche Bank upgrades the UK company this morning.
Joe, thank you very much. Joe Eason from our equities team. Quick word then, recapping Commerzbank, said it's aiming for higher profitability. So just to go over these lines once again, the stock up by 1.6% as Bettina Orlopp sets out her stall, saying they're aiming for higher profitability. They want to increase their return on tangible equity to more than 12% by 2027. We will get further updates on this story shortly. This is Bloomberg.
Welcome back. European equity markets are quite interesting this morning. There's a lot of things kind of moving around, which I think are fascinating. Look at the underperformance at the bottom of that board. That's the FTSE 100, in case your eyesight isn't quite good enough to read the little name. But that's the FTSE 100, which is underperforming this morning. And the reason for that is that oil stocks are under pressure. Oil is down quite hard. Elsewhere, you're seeing the consumer story out of China lifting names like LVMH quite strongly. So what you're getting is outperformance in the CAC 40 this morning. It is up by 1.5%. Broadly, amalgamate the two, the stock 600 is up by 1%. But China, interestingly enough, I think is the dominant story. I started the show by talking about the fact that Micron was going to have more of an influence, but it does seem as if the China effect is fairly big this morning.
Yeah, absolutely. The China impact writ large across these markets. There's plenty of other moving parts on the corporate level, aren't there, as well? And we're dealing with a lot of those this morning. Commerzbank is one of them. BASF is another. What unites these is they're both out of Germany. And let's talk to Oliver Crook about them. Bloomberg's Oliver Crook in Berlin for us. Ollie, let's start with the Commerzbank story, shall we then? We're getting this fight back then. Bettina Orlopp coming out the gates this morning with her plan for profitability at the business. Is it enough to convince shareholders to stick with her and not get into too much of a dialogue with Ocasio?
Yeah, a really busy day for Commerzbank these 2 days. And just to give context for where this is coming from, this is the management of the bank that is presenting to the supervisory board. The day one of that is where we got the announcement of Bettina Orlopp being announced CEO. And now we're going to get the sort of how she's going to try to position this business and try to make the best case to shareholders, because the alternative is from Andrea Orcel, which we've been talking about incessantly for the last 2 weeks. And he has a really strong track record from making banks profitable, from returning money to shareholders. If you look at return on common equity, I believe we have a chart on this that compares Commerzbank to UniCredit, the contrast is extremely stark. So what we're hearing from Bettina Orlopp this morning is that they see net profit over 3 billion euros by 2027. Commerzbank, they expect the return on tangible equity to increase to over 12% by 27, and aiming for payout ratios of over 90% for 2025 and on, and really seeing a faster, stronger improvements in profitability is the message that she's trying to drive home. So again, who she's competing against in a certain way is Andrea Orcel. I also wonder that, sort of regardless of what happens with this deal, whether or not Orcel is able to move in, does this give Commerzbank management the cover they need to make some really tough decisions, by the way, that we're seeing across the sort of sphere of German industry?
Yeah, it's interesting. You could always argue, why didn't you do this before? But maybe you're right. Maybe this does give them the opportunity to make some of those moves. Let's head south from Frankfurt to Ludwigshafen and talk a little bit about BASF. So this feels fairly significant. We're talking about a lot of businesses that previously made up what you could argue is a conglomerate, which BASF actually in reality looks like, now being separated out.
Yeah, exactly. And we're hearing now from the management board that is speaking directly to shareholders, Capital Markets Day that's been going on for today and tomorrow, and trying to get the strategy for the new reality for BASF, which is a business that has been tragically and sort of totally rewritten by the war in Ukraine and demand in China. What they are telling shareholders today is that they are going to go back to basics. They're going to go back to their sort of core. They're going to focus on cutting costs. They're going to focus on cutting the dividend. This is going to be the headline for a lot of shareholders. The dividend will be at least €2.25. That is down from 340 previously, so that is a material downgrade to the dividend. And they're going to focus, as we say, on their core business, on chemicals, materials, industrial solutions. There are some questions about what is going to happen with some of their other companies. They're talking about active portfolio management. That sounds like they're going to be selling parts of their business. We also have previously announced and reported on the fact that their agricultural chemical unit, they may list that. But for BASF, the step back here is looking at what they're going to have to do to this business to keep it profitable.
Yep. Ollie, thanks for the update on both those stories. Oliver Crook joining us out of Berlin. I want to turn to what is happening in France on the corporate front as well. Bloomberg understands that the French food catering giant Sodexo is said to be exploring a potential acquisition of its US rival Aramark. Any potential deal could face antitrust scrutiny. Sodexo would also need to secure significant funds to make such a sizable acquisition. Let's go with this story a little bit more. Manuel Bagori joins us now. Why does this make sense?
Definitely, Guy. I mean, it's a very complementary transaction. As you said, Sodexo of France trying to grow and expand operations overseas and in the U.S. I mean, the biggest market with Aramark, which is a perfect combo for both. I mean, it just makes strategically perfect sense. Now the question is, whether it would generate a lot of antitrust concerns, given that those are two of the biggest players in this food catering space, right? So I guess beyond the strategic rationale, now the main hurdle remains: could they clear antitrust concerns if such a deal were to happen in the end, right? Just we need to keep in mind that this has been discussed on and off and on again, so it's in a very exploratory stage at this point in time.
Okay. Exploratory stage. Manuel, thank you very much. Manuel Bagori, a Bloomberg Deals reporter. Yes, making the point that it could face antitrust scrutiny, which is interesting in a market, in a business that a lot of this catering still happens in-house. But in terms of these other providers, maybe there is a conversation there with antitrust in mind. Coming up on the programme, we'll get back to central banking. The latest rate decision from the SNB is just moments away. Will Switzerland go with a jumbo cut? We heard from the Riksbank yesterday. They didn't, but they flagged that there could be one coming. We'll get to that conversation shortly. This is Bloomberg. Welcome back to the opening trade. Let's get straight to the SNB rate decision. The SNB has cut rates and they have gone with 25 basis points. So there had been some sense that there could be a cut of 50 basis points here. They have not done that. They've gone down to 25 basis points. But when you look at the sort of consensus, was what the market was expecting. But there had been this chatter guy, there had been this sort of suspenseful narrative that perhaps we'd get something larger, given what the Fed has done, given the strength of the currency and given the weakness of inflation.
The euro drops quite sharply on the back of it, as you can see on the screen in front of you. There was clearly some positioning maybe for that 50, maybe the idea that we could see a surprise on Thomas Jordan's last meeting. So the euro weakens once again. Currency strength is a factor that the SNB is clearly going to be thinking about. It is now seeing 2024 GDP growth of around 1%, 25 at around 1.5%. So interestingly enough, it does still see the economy re-accelerating.
And prepared to intervene in currency markets. Sorry, you may have mentioned this one, if needed. So that's another line coming through from the SNB. Let's get some analysis then on this decision. Let's speak to Christine Kuhnby-Nielsen, analyst at Danske Bank, covering G10 FX, and had her own expectations going into this decision. Christine, very good to speak to you. So I think that you, like many others, were expecting 25 basis points. We got that. But do you think then that the idea of 50 comes back for the SNB? Or where does this decision leave you?
Well, I think I wouldn't rule out a 50 points reduction in the policy rate at the next meeting, but it is definitely not our base case. Our base case for today was a 25 basis point cut, and we also expect that in December. I think we will have to see a significant deterioration in the inflation outlook and possibly corresponding with a significant appreciation in real terms of the Swiss franc before that becomes relevant for the S&P.
Yes, we've already seen some voices in Switzerland complaining about the strength of the currency. It's strengthening a little this morning on the back of this decision, but the strength of the franc approaching all-time highs that it reached against the euro in January, of course, and some export lobbies speaking out against that, urging the central bank to intervene. Would you expect intervention? They are saying this morning that, that they're prepared to intervene in currency markets if needed.
Yeah, so I think the statement says the same thing, that they will remain to be prepared to intervene if they feel the pressures there. I would think that they would intervene if we really get an excessive appreciation. I think my case has for the past many months been that as policy rates near zero, they would gradually start to look over into FX intervention. I don't think they will intervene necessarily currently, but also from what you mentioned, the inflation forecast has been lowered quite significantly over the entire horizon. So the option is definitely open, and I think we will, towards the end of the year, possibly see some intervention.
OK, let's just talk about that inflation target, Christine. The SNB sees 2024 inflation at 1.2%. It then sees 2025 inflation at 0.6%. It then sees inflation at 0.6% in the second quarter of 2027. What kind of a rate do you think is commensurate that would not be restrictive if we have those kinds of inflation levels for Switzerland?
Yeah, so I mean, it's still within the target range of the S&P, this 0 to 2% inflation rate target that they are running with. There is a lot of uncertainty, as we see for the rest of the world, where neutral rates are, where nominal neutral rates are as well. I think what also the President Jordan has flagged, and there's been different academic papers as well, that the neutral rate is around the 1% in nominal terms. So I think they're satisfactory with now having to remove a part of remove the restriction of monetary policy. So I think we'll have to go into slight easing territory. So I think 0.75% is my base case, is the endpoint.
Inflationary pressure has decreased significantly. That is the line that is coming out of the SNB in the statement. Inflationary pressure has decreased significantly. Is that currency related, or are there other factors, do you think, at play here?
I think in the statement they mention as well that it has to do with the currency. But if I was the S&P, I would definitely be worried about. I think there are some domestic factors as well. Rent inflation hasn't been this big boost that the S&P expected in terms of the headline numbers, that we could get a rise in headline inflation up from these 1.0% or around that level that we had earlier in this year. But I think the imported part of the inflation plays a large role, and in that sense the Swiss franc. And that's why I also think it's important, if you look at FX, that if the S&P becomes ready to intervene. So definitely some domestic factors, but I think the currency plays a large role.
I think they must be watching at the S&P because they're just answering Guy's question. We got a headline saying inflation decline reflects appreciation of the Swiss franc. So there's the link that Guy was referencing there. Kerstin, let me come to Thomas Jordan. Of course, this is the last of the policy decisions that he will oversee. He's handing the baton on after some 13 years at the helm of this bank. He didn't surprise today. He has had the ability to surprise quite recently, actually, this year, but also back in 2015, we remember very well. What do you think the market transition to a new governor will mean, if anything?
Well, I think now that Vice President Schlegel is set to take over, he is also from within the bank. So I think that will definitely ensure some kind of continuity. So I don't think it will matter much in that sense in terms of the politics, in terms of how the S&P conducts monetary policy. But definitely, it's an end of an era, and will be interesting.
Yes, and he will have to pick up on where Thomas Jordan is leaving off. We're just getting a red headline across the Bloomberg terminal saying that further cuts, this is another SNB line, I think we might have mentioned, further cuts may become necessary in coming quarters. Is that designed to limit moves in the currency, Kerstin? What are you expecting to see then in terms of the moves from here from the SNB?
I think they will deliver the final cut in December. I think it's the right decision to still signal, okay, they're open to adjusting monetary policy if inflation surprises to the downside. I mean, we've repeatedly seen that inflation has undershot the S&P's forecast. So I think it's the right move in that sense. But I think it will be sufficiently with just another cut in December, and then they will resort to FX intervention as their second monetary.
Okay, let's talk about that intervention. If we do see the ECB delivering an October rate cut, how does the SNB react to that? Is it via currency acquisition? Are they going to be in the currency market on the back of that? If we see problems with the French government causing further volatility in the euro as well and a weakening there, what are we likely to see? Are we going to see, just in terms of the FX setup here, there's a number of catalysts that we should be watching out for. How aggressive do you think the SNB may have to be?
Well, I think it's definitely important, not necessarily like from a politics perspective, if the ECB cuts rates in October, but I think they will definitely keep an eye on how the Swiss franc reacts in terms of both against the dollar, but also against the euro. So I think if we see really excessive appreciation also from current levels here, they will intervene. I think they'll be a bit more cautious, see, okay, if this is something we can actually counteract, but I think they will step into the market. I do. Even though they've not flagged it yet necessarily.
Kerstin, thank you very much. Thanks for joining us. Kerstin Kuhnby-Nielsen, analyst at Danske Bank. They have cut rates then 25 basis points. They say further cuts may become necessary in coming quarters.
Just a report landing in my inbox in the last couple of minutes from Deutsche Bank. We're updating our ECB call. We had been expecting the ECB to follow a gradual normalisation of monetary policy with 25 bip rate cuts once per quarter until a terminal rate of 2 to 2.5 is reached. We are now moving to a faster normalisation call, is the line out of Deutsche Bank. So a number of banks, I think HSBC was another one, talking about the fact that they think the ECB, I may be wrong about HSBC, but a number of different institutions are talking about the fact that they think the ECB will now go in October.
And we have been pricing in more rate cuts, haven't we, this week? That's been the theme. We spoke to Jean-Claude Trichet earlier on in the programme. He was saying it's not yet his view that this slowdown in growth, it necessarily needs to end in a Eurozone recession, but he wasn't very positive about the sort of stagnation nature of the data.
Helen Jewell was talking about the fact that European assets could benefit if the ECB is cutting in the same way the Fed is, i.e. because it can, not because it has to. Deutsche Bank saying we do not rule out a 50 basis point cut in December.
OK, so and all of that ECB conversation in the context of other central banks, importantly setting it in that Fed context, sticking with the central bank's theme and back to the SNB, just to flag that we will be speaking, the team will be speaking with the incoming Swiss National Bank President, Martin Schlegel, on the central bank's outlook as he picks up the reins after today's rate cut. That conversation later today. We'll get back to some of the geopolitical themes which come to us from different parts of the world and through New York this week. Coming up, Ukrainian President Volodymyr Zelensky is in the United States this week. But will this trip encourage support for the war-torn country? We'll get to that conversation next. This is Bloomberg. Welcome back to the opening trade. 8:43 here in London, and European equity markets benefiting from a number of themes. One is technology, AI, Micron, reigniting enthusiasm for that particular investment theme. We've also had positive news coming through from China for a third day, this around the fiscal plans that the Politburo in China might have. So that's the market story, and that seems to be, those are the themes that seem to be driving risk assets this morning. But plenty of geopolitics to talk about, perhaps in particular because the UN General Assembly is taking place. Let's turn to the Middle East. A 3-week ceasefire between Israel and Hezbollah has been put forward by the US, by Europe and a host of Arab nations in an effort to prevent all-out war.
I would like to see a ceasefire and the return home of Israelis to the homes in the north and southern Lebanese to their homes in southern Lebanon. That's what we all want to achieve. It will happen either after a war or before a war. We hope it will be before.
Bloomberg Horizon's anchor Jemana Bassett covering this story for us and in London this week. Jemana, good morning. Talk us through the responses then from Israel, from Lebanon. Crucially, have we had response from Hezbollah?
Yeah, well, interestingly, into the UN General Assembly, there was many people were saying that this was going to be a crucial 24 hours for determining the trajectory of the war. And so that statement that was put out yesterday by President Biden, President Macron, alongside the support of other EU leaders, Arab leaders, was significant. They are calling for a temporary ceasefire, saying it is time to conclude a diplomatic settlement that enables civilians on both sides of the border to return to their homes in safety. Now, we haven't had an official response yet from Israel, but our reporting suggests that they are open to the idea of a temporary ceasefire. But earlier on today, I did have the opportunity to speak to the Lebanese economy minister, Amin Salam, and I started off by asking him about whether the Lebanese government would be open to this ceasefire proposal. Let's listen to what he had to say.
We have received very positive messages, I would say, the past 12 hours since our Prime Minister has reached New York and has his speech at the Security Council. There has been positive messages from Hezbollah within an intention to avoid escalation.
Now, one thing that I need to highlight here is Hezbollah do have political representation in the Lebanese government. And so I put the question to him as, are the Lebanese government open to this? But then I followed up by saying, do you have faith that Hezbollah will adhere and be open to the terms of the ceasefire? And he said, Hezbollah have shown flexibility in the last 24 hours, and therefore it is his view that Lebanon, the Lebanese side, will also sign up for the ceasefire because it's also so crucial for the economy and also from a humanitarian perspective.
The Lebanese economy has been hit hard, really, so hard over the last few years. Talk to me about what impact the latest conflict is having in terms of the impact on the economy. It was already on its knees. What's happening?
It was on its knees, and it's been 3 years of stagnation. You may recall Lebanon actually defaulted on its debt. There still hasn't been a successful restructuring process because there's no government. The government that I was referring to now is a temporary government. There's no president because they can't agree on who the next Lebanese president is going to be. So that's been the case for the last 3 years. The economy has been in a state of decline. The World Bank say that 50% of the population are living below the poverty line now. So this was the starting point even before the war actually begun. The economy minister is saying to me that something needs to be done. The ceasefire needs to happen before the economy reaches a point, to his words, of no return. And therefore, it is absolutely vital that not only does the war stop from an economic perspective, but that also Lebanon starts doing the right things that are necessary, the reforms that the IMF have been asking for to set the economy back on track again.
Jemana, thank you very much indeed for updating us. Jemana Bassett, Horizon's anchor, joining us here on set. Let's turn to another conflict that we are spending so much time thinking about. Global leaders have been reiterating their continued support for Ukraine at the General Assembly in New York.
Putin's war has failed, but we cannot let up.
Now Putin does seem to be planning attacks on our nuclear power plants.
It's so important today to stop the Russian war in Ukraine.
We cannot grow weary. We cannot look away, and we will not let up on our support for Ukraine.
France will continue to do everything in its power so that Ukraine can hold strong.
Do not divide the world. Be united nations, and that will bring us peace.
The US has announced a new package of weapons that are going to be sent to Ukraine. We've got a meeting that is going to be taking place today. We're anticipating that President Biden will be announcing that weapon surge, that military aid surge, a little later on, probably post that meeting. We'll see what both of the leaders do have to say. Orysia Lutovic, Ukraine Forum head at Chatham House, joining us now. Thank you very much indeed for joining us. What do we expect to come out of this meeting that is taking place between President Biden today and Volodymyr Zelensky?
Okay, there will be two levels to this meeting. One will be, of course, public, the show of strength and support for Ukraine, the announcement of military packages that are basically in the pipeline since the supplemental was approved in April. United States significantly increase its capability delivery to Ukraine. But what is more important, what will happen behind the closed doors? As we understand, President Zelensky is trying to align the strategy of Kyiv and Washington, how this war must end, and how actually to defeat Putin's troops inside Ukraine. And there has been a lot of doubt whether Washington and Kyiv are on the same page, because Washington supports Ukraine to defend, while Kyiv wants to expel the troops and achieve a victory. And whether we'll have that alignment, it is not clear.
In terms of what this peace plan could look like, this victory plan could look like, how critical is it that we see extra weapons being applied to the conflict, that the West does provide extra weapons, that it does give maybe Zelensky, Kyiv, the green light to push further into Russia? How kind of important is that, and how risky is that, given what we're now beginning to hear from Moscow?
Well, first, military component is critical because it gives Ukraine a stronger position on the battlefield. Ukraine has opened new opportunities, including with incursion into Kursk, into Russian territory, that it actually struggles to exploit because it lacks certain capabilities, air cover, long-range missiles, but also it is failing actually to prevent Russian grinding advances in Donbass. So Russia has an advantage in artillery, in man, and Ukraine is actually heroically and strategically trying to have that advantage without the necessary kit. So that's important. Now, in terms of escalation, we are not hearing much new from the Kremlin. From day two, they have put their rhetoric about nuclear possibility of use of nuclear weapon in this war on the table. They've never taken it away. And yesterday, the National Security Council of Russia amended its doctrine. So that basically is done ahead of the meeting. It's clear blackmail ahead of the meeting between Zelensky and Biden, and also after the failed test of one of their missiles, Sarmat, that is supposed to be a carrier. So failing, conventionally, Russia is exploiting what it can, and that is aggressive rhetoric.
Orysia, good morning. You call it blackmail. I was also looking at what it was that President Putin said yesterday, and he was saying that aggression versus Russia by a non-nuclear state, but with the support of a nuclear state, will be considered a joint attack on Russia. Is he talking directly about the use of Storm Shadow missiles then? And if so, why does he take that? Why does he read different things into that than the other weaponry that the West has already supplied, that is already being used in Russia?
Well, Anna, it's interesting you point to this inconsistency because there's nothing new in terms of supply and long-range strikes. Specifically, Ukraine has used drones to actually attack very deep inside Russian territory. At this stage, it's all about preventing that crucial decision that President Biden and other allies, such as United Kingdom and France, are supposed to make about the future of this war. And what Kyiv is saying is that Russian red lines are actually, they can be crossed without any serious consequences. And Kyiv has demonstrated it by literally taking parts of Russia, by attacking its Black Sea Fleet headquarters. And Russia is weakened right now. It is struggling actually to defeat Ukrainian army. So what kind of escalation could happen? And clearly, this is done specifically to paralyze decision-making in the West.
Do you expect President Biden to do things that will stand the test of time, Aricia, on this, given we have an election coming up very shortly in the United States?
Well, President Biden has very little time, it is clear, and he doesn't want too much to rock the boat internally ahead of that crucial election. It is clear now how the Republicans are already trying to misuse Ukraine in its battle against Trump, as we see by that demand of Speaker Johnson of firing of Ukrainian ambassador after the visit of President Zelensky to a munition factory in Pennsylvania. It is a very toxic field where Ukraine may find itself. Unfortunate, because Zelensky is trying to be very cautious not to exactly give an impression of interference. But President Biden still has presidential drawdown authority that he can take more serious capabilities and give it to Ukraine, and also try to bring all the allies, as I said, Berlin, London and France, especially Paris, on the same page about how this war strategically should be pursued forward.
Marissa, would a Harris victory in the November election signal continuity when it comes to Ukraine and the United States?
Apologies, you're talking about Kamala Harris if she's elected?
Yeah. Yep.
Yes, I think this will be much more of a continuity, and Biden could, even in these last few months, set the strategic direction of how the next president will continue. Of course, with another candidate victory, it will be an uncertainty and quite a dangerous situation from Ukraine, judging by candidate Trump's statements about how U.S. should take away its support from Ukraine, and how actually he was insulting Zelensky in his comment about being the best salesman in the world.
Aricia, thank you very much. Thanks for joining us. Aricia Lutsevich, Ukraine Forum head at Chatham House. We thank you very much for your analysis, and of course plenty more to come from the UN as we go through today, and no doubt Ukraine being covered a lot more here on this channel. Let us get back to what's happening on the corporate agenda and the banking space in Germany, Guy, because Bettina Orlop, the new CEO over at Commerzbank, is now speaking at the same Bank of America event we heard Orchel speaking at earlier on this week. Again, adding to the defence, saying they'll evaluate all strategy proposals coming in, which is an interesting line.
Yeah, they want stability to be able to evaluate options. They won't do anything crazy. They won't sell any businesses. They won't make any crazy acquisitions, her words, not mine, to defend the independence of this institution. We'll think about the strategy beyond 2027. We will evaluate all strategy proposals that are coming in. Is that a little chink in the armour? We will evaluate all strategy proposals coming in.
Yes, and as you pointed out, certainly one shareholder has been urging engagement, urging that the Commerzbank leadership at least engage and listen to what Orchel has to say.
I'm assuming that means that she will listen to Orchel. I'm assuming that means that Orlop will have a conversation. We'll evaluate all strategy proposals coming in. Coming in from the outside, it does sound like. But she needs to make a case for why Commerzbank needs to remain an independent institution, and why she should remain at the helm of that institution.
The stock is gaining this morning. It's up by more than 3%, 3.5% higher, taking another leg higher on some of those comments by Bettina Orlop. More broadly, the story, we have a strong session underway here in Europe. US futures point higher. It's about technology and it's about China. This is Bloomberg.